Alright, so here we are with the euro, and this is the main chart that we were looking at last week. So last week when we had the webinar, we were up around this area here. As you can see, we came down, we had a good downtrend going, then we had this little bear flag kind of formation here. Like I said, this is about where we were last week when the webinar happened. And we had this upsloping trend line here. It wasn't really a trend line, only 2 touches, but at least I like to kind of think of my trading in terms of a bunch of different sandboxes, and when I draw the lines on the chart, I'm kind of outlining the sandbox. That if the price stays within that area, generally I'm feeling good about my fundamental and my technical analysis. And if we start to get far outside of that area in a direction I didn't think we were going to go, that's when I start wondering, what have I missed? And that's when I'll get very proactive about getting in and trying to figure out what I did wrong, or if I've done something wrong at all. I mean, you never know as a trader. So what happened was we had this little formation here. I'm sure that at one point, if we look on a, let's go down one chart, take a look here. So we went all the way up here, then we came down and we almost tested this. In fact, if we redraw, well, yeah, we'll just leave that trend line where it's at. We came very close to this trend line, and then we bounced. Up here was probably one of the best opportunities for us to enter a short. And in fact, on Monday I took a short at 43.94. We'll talk about some of the trades later, but as you can see, the week has not been good for the euro. We're very close to a psychological level here of 1.400. The other thing about the psychological levels, options tend to cluster around zeros, 250, 500, 750 areas. So there's a bunch of options that are sitting down at 1.4, I can almost guarantee. That puts in play a very interesting dynamic. There's a lot of people that want to push it in that direction because if those options get exercised, they're going to win. And there's a lot of people on the other side of that trade that are going to want to try to push the market back in the other direction. So last night I was in a trade and I closed out right around 40.55 because I was pretty sure that that the trade had seen what it was going to see, and I believe that the option defense was going to start there. We actually traded down. Let's see, we traded down as low as 40.28, somewhere around there. And but then it took a rather strong bounce. It got back up above 41 and couldn't sustain that. Let's go down even further, and we'll take a look at what the price action was like. So we got all the way up here, and we had this major fall, another push lower trying to get to 4.000. We didn't get there, and then bam, traded up. That might have been as a result of some disappointment about the Philly Fed. The Philly Fed numbers today came in, let's see, 15.2 on an expectation of 18, and the statement itself was fairly weak. And we'll talk a little bit about central bank statements later in my analysis here, but yeah, there was some economic news that came out this morning. It wasn't great. But then, almost as quickly as we made it back up above 4,100, there was a lot of rhetoric out of D.C., a lot of talk today about Glass-Steagall provisions being reinstituted, which would cause United States-based banks to not be able to handle investments and also not be able to do proprietary trading anymore. If you look at the banks and where they have made money in the last year since the crisis, You know, there's a lot of talk about how the risk that they were taking on in trading led us into the financial crisis, but a lot of their profits have come still from trading. I don't see the banks giving that up. So you could see banks like Citibank having to split in half, have the commercial bank side go off in one direction and have their trading operations go off in another direction. As part of the TARP money, folks like Goldman Sachs had to become banks. So, you know, those guys are up. You know, Goldman Sachs wasn't a bank in the first place, not in the not in the commercial sense. To take the bailout money that came, they kind of had to change their charter a bit. They're not going to give up on trading. So, you know, I could definitely see Goldman Sachs Banking Incorporated and Goldman Sachs Trading Incorporated, or however you want to name it. But the equities markets tanked, and that tends to have a drag effect on the Euro USD. So once again, we tried to get higher again, we failed, and we came down all the way back down here to 40.65. So I'm still bearish. I still don't see any great news coming out of Europe. With the equity markets weak, and you know, this could be the beginning of a correction. S&P, Dow have all had quite a run since last March. It's very, very logical that they could come off, you know, 5–10% in the next few months before they resume, you know, an uptrend, if an uptrend is there to be had. So at least in the short term here, I don't see us recapturing any highs. Let's back out again here to the weekly. As I said in my weekly update, which is posted on the on our website, as long as we remain below this high here, I'm going to sell rallies. I'm going to look at short-term charts, and I have some techniques I have, and for establishing levels where I'll take trades. But I'm not going to try to get long down here just because I think that it's time to go up. Actually, if you step out even further here, we broke this support. That's now probably going to be retested as resistance, but as long as we stay below there, certainly there's no upside. This is the 4.0 level psychologically and options wise. Business really wants to get done at that level. If we have a sustained break of that level, we run into a lot of crosstown traffic here, and you know, and probably another support level down here, which is, let's say, around 37.41. So let's say 37.50, which once again, remember I said the 0, 250, 500, 750 levels tend to have a lot of options in them, so you'll tend to see support and resistance around those levels. If we look back over here, this 37.50-ish area was tested on a run-up on this trend. There was a pullback and broke through. Resistance became support. As you can see, it came back here. Tried a bunch of times to get back below that level. Couldn't. Then it resumed its uptrend. That same type of price action is definitely within the realm of possibilities here on the downside. You know, depending on how you look at what happened here, you know, you can see elements of a double top or maybe a head and shoulders formation if that's the kind of trading analysis that you're comfortable with. You know, so if you have a head and shoulders, you know, implications of that could be a trade down to here or down to here. So keep an eye on this yourself. Keep in mind that any of this analysis that I give, I really want you to take it with a grain of salt and try to fit it into your own trading system. Do not trade the way I trade unless you fully understand it and you're in sync with me, which would really require you being in touch with me on a daily, if not hourly basis. But you know, take what I say, work it through your own processes, go out and do your own fundamental homework and see if this fits. And if this is in alignment with how your trading system lines up, great. I hope that I'm giving you some great information here to plan trades, or at least keep yourself on the right side of the market. That's really my goal with this with the weekly update process.